Welcome, my name is Vishal Texanani. Today I'm speaking to Emilio Gonzalez, the CEO and Managing Director of Pendal Group, and we're going to talk about the fund manager's recent rebranding and its business outlook. Emilio, it's good to talk to you. How are you?
I'm very well, thank you. Thanks for having me.
No problem. Thanks, Emilio. So, Emilio, first question. Pendal Group, up until May this year, was known as BT Investment Management, which was once upon a time a wholly owned subsidiary of Westpac. Can you tell shareholders and investors whether the name change also signifies a strategy change and a new direction for the business?
The name change was really as a result of the change in the ownership of the business. So it doesn't impact the strategy, it doesn't impact what we do, it doesn't impact how we run our business. It's really a reflection of the maturity of the business, where it was, where it is today, and where it's going in the future. So if you think about the BT Investment Management, when it first was floated as a separate company, it was 60% owned by the broader Westpac group. So we were part of the group. As it sold down progressively down to 10%, we're no longer part of the overall group, and that's as a result of our success. And so we felt we needed to demonstrate to the market that level of independence, that level of maturity, and also take away the confusion of the BT name as to where we belong. And hence the rebranding to Pendal Group, which has gone down very, very well, and our ability to move forward with our own identity and representing that independence and that maturity that we've been able to succeed since the business was a separate listed business back in 2007.
Okay, so I just want to touch on what you mentioned there about Westpac having sold its stake down to 10%, and Westpac has said that it intends to sell all of its stake in Pendal Group subject to favourable market conditions. Can you clarify for shareholders what that relationship with Westpac will look like going into the future? Because Westpac is quite a significant client and consumer of Pendal Group's products, is that right?
It is Westpac as a group. I look at it as BT Financial Group is our major client. Westpac, the corporation, is where the equity is held.
Yep.
But our major client is BT Financial Group because we were part of that group initially. So there's a natural affinity there in terms of us managing a lot of their clients' products.
Okay, so it's their super funds and their advisors. They invest a lot of their clients' money into your managed funds. Yep.
The non-super funds on the different model portfolios. But it's always been at a commercial and an arm's length. And so the relationship with BTFG is the same with any relationship with any one of our clients. It's arm's length. Naturally, it's a significant one because of the history and the connection over time.
Right.
And so that relationship again doesn't change, and the equity component from 60 to 10 doesn't change that relationship. Our key focus is managing their clients' money and doing the job we've been asked to do, and all on a commercial basis, all on an arm's length basis, and making sure that we service them, making sure that we provide the right service and performance that we would with any other client as well.
Okay, so let's turn to industry trends, and one of the biggest challenges that I think active managers face is fee compression. We actually just saw yesterday that Westpac announced a significant cut to its fees within the BT Financial Group business, within its platforms, and you're seeing a proliferation of passively managed products, ETFs, index funds. How is Pendal Group positioning itself for these trends? How are you justifying to clients the fees you're able to charge?
It's a very good question, and it's because there's a greater onus of responsibility, I think, on investment managers now to demonstrate their value proposition. No longer is it sufficient to say we add value or there's a marginal add value to that. And so there's a greater demand from clients wanting to know, well, what is that value? What is it that you are going to do if I invest in this fund, and why is it better than the passive alternative?
Yep.
And I think admittedly active managers haven't done a great job in articulating that value proposition. So what we have to make sure is that our track record, our performance on an after fee basis over a long period of time demonstrates that we can make money for you rather than just going to a passive alternative. And if you look at our performance, we have a good story to tell there. We have a very stable team, and there's an opportunity to, I think, for those that demonstrate the ability to outperform the market on a consistent basis, to get on the front foot and articulate that rather than just believe that it's all too hard and go passive.
Sure, okay, and we'll touch on performance in a second, but is there, would you be looking at taking a BlackRock approach, for example, where you've got a house that provides active products and a house that provides passive products with iShares, for example? Yeah,
no, we're a pure active manager. We're bottom up. We believe in active management. We believe that markets aren't always efficient, and there's an opportunity to make money out of the inefficiencies that the market presents itself from time to time. And so our DNA is active management. The people we bring on board is about active management, and what we do is about making money for our clients without over and above what a passive alternative can provide.
Okay, so let's explore that further. In your most recent half-year results, one of the metrics Pendal provided to the market was that 96% of the money it manages was beating its respective benchmarks over a 5-year period to March 2018. Now that's a pretty good position to be in as an active manager, because you hear all the time from the industry that active managers have their time in the sun and then they fade away into the average. So I'd like to know, what are you doing to keep your team, your funds, your organization match fit, so that you're a fan of soccer, they don't turn out to be like Germany in one tournament, which wins the World Cup, and then in the next tournament it drops out of the qualifying round?
Well, one strategy, you have many Germanys, not just one Germany. So we don't rely on one team, we rely on multiple teams. Because I think there are times when certain strategies will be in and out of favour. Yep. There are times when things will work in your favour and they don't work in your favour. So an important part of our business model is making sure we have diversity of investment styles, diversity of investment teams, and the important part of our business is we have diversity in terms of our clients, geography, and our investment channels. You're right, it is very important to keep people match fit, and like any team, you need to make sure that the headspace is in the right space, that they continue to invest in what they do, that you're giving them the break every now and then. You can't go 100%, 120% day in, day out. This is one of the few industries that you get measured every day, every week, every month, every quarter, every year, and multiple years around that. And so for that reason, you want to have a multiple of teams. So if a France or Croatia get up, to use your terminology, you're there and you're taking advantage of that, but also ensuring that you have the right environment. Although we have 100 billion under management, we're very much a boutique environment. We have a lot of teams, a lot of small teams, 2-3 man person teams. We offer them investment independence. We offer them clarity in terms of how much money they want to run, because sometimes size is a headwind in terms of managing money around. It is a constant exercise, but you also need to recognise there will be periods when things may go against you, and it's those periods that, one, you need to revisit what you do, but also maybe be more active, because the market is going in your favour to take advantage when you come out the other end.
Okay, last question I can't help but ask. You are, of course, the head of a very big multi-asset manager. As we sit here today, what is your perspective on markets, and what is Pendal thinking in terms of what's good value from an asset class perspective? Our investors would always love to know.
Yeah, look, I think we're in a very interesting position in terms of markets, asset classes. I think asset classes are the world's in a good spot, but not a comfortable spot. And so if you look around the world from a macro perspective, growth is reasonable, unemployment has come down, rates are low, inflation is not a real issue. So in terms of the big macro picture, you've got every reason to be optimistic around that. From an absolute perspective, you'll see that people probably think equities are expensive, rates are sort of on the way up, so we can't get too comfortable around it. And as I always say, that the best strategy is diversify your assets around that. There's no question that we're entering a world of quantitative tightening after a period of quantitative easing, and the central banks have a real challenge of how do they introduce that and reverse their balance sheets from easing to tightening without scaring the markets. We're entering a world where markets have had a very good rally offshore and also a very good environment here, but for good reasons. We've seen that earnings come through. By the same token, we are seeing, as I said, the potential of rates increasing. We're also seeing the trade war between the US and China. I think that's a significant headwind, and that could have detrimental effects through that as well. So as I said, we're in a good place, but not necessarily a comfortable place. And when you have those conditions, you don't bet on one asset class. Make sure you have a series of diversification.
All right, Emilio, thank you so much for your time and for sharing insights at what's happening with Pendal Group with me and our customers.
Thank you, Vishal. Much appreciated.
I hope you enjoyed this video. Now, please remember, what we talked about today isn't a recommendation to transact into Pendal shares or investment advice. If you are thinking about doing something like that, please do your research and consider seeking financial advice so that you get the help in making an investment decision that's right for your circumstances. My name is Vishal Teksanani, and I'll see you next time.